What's up, guys? Back for another week of Jack of all trades here with David. I'm Kalen. Going to go over a couple things today. I think last week we touched on Fibonacci lines, a few other things I can't fully remember. We usually go off on tangents. So we're going to go through some more like kind of simple support and resistance stuff today. I'm going to run you guys through just a chart that kind of came up this week. Small caps are kind of my area of expertise, so I'll just show you roughly how you might be able to draw lines in for support and resistance on these kind of things. And it's really the exact same process works on everything from, if you're a Forex trader, crypto, like, big caps, it's all the same kind of stuff. It's all the same kind of pattern. One thing that I learned a long time ago was that the more complicated I made stuff, the worse I traded. So David can probably attest to that.
I concur.
Yeah,
I concur. my chart's a lot more complicated than yours too, and that's me after simplifying it.
Yeah, like I had days where like I would have 16 indicators and I'd have like all this information. I have balance sheets open and I'm trying to do like a 10-minute trade, right? I'm looking at it and I'm like, well, this line contradicts this and this contradicts that, and but these three line up, and then I try and it just gets so messy. So it's a lot easier to just cut all that stuff out and keep it simple. Sam, you want to pull up my screen here real quick, and we'll just kind of go through this. So this stock, BNTC, I don't know what the company is, as usual. I don't. so I'm not going to tell you what it is. I'll go to the daily chart here real quick. So, it's a low float. You can see here, this is the daily chart. So for me, anytime I see something like this where you have all these days, you got these big spikes and big wicks and, it just crashes every day, company's garbage. So that's perfect. Like, that's what I like to see. So when you look at something like this, this was just earlier this week. This all kind of happened. So, we had this big day here was kind of the first day of the run. It was over 100 million volume. Really the only thing that I personally look at, I think, David, you're probably about the same, maybe a couple other indicators, but really all I look at myself is volume and then just the actual stock pattern itself. I use VWAP as an intraday indicator. What do you use? Do you use moving averages or anything? Or?
I'm off and on with moving averages. I'll keep the 50 EMA there. That's it. But I rarely look at those. I'm just more RSI and like volume. Those are the more important things. Yeah,
so you're basically using like one indicator essentially.
Yeah, like one indicator, and then you have a second one just to kind of confirm or support your first one, and that's it.
Yeah. So the reason, like VWAP for any kind of intraday trader or day trader, it's really all it is it's just basically, who's overly in control of the stock. If it's above VWAP, then the longs are mostly in control. If it's below, the shorts are mostly in control. That's really all you're looking at. So it's a really rough indicator. Like, I'm not using it so much as a line to play off of. It just kind of gives me an idea of like, how many people are on what side of the trade. Really important though is volume. It's something that's, it took me a long time to remember to keep an eye on that. Like I'd look at trades all the time and I'd see stuff intraday and I'd be like, oh yeah, that pattern makes sense. And then I look at the volume and I'm like, oh yeah, that's perfect. That makes sense. But if you're playing on like the 1 minute candles or something like that, things are happening so fast that, sometimes you just stare at the chart, you forget to look at the volume, and then you might miss a play or you might enter too early. That's all stuff that really just comes with screen time. It's easier said than done, I guess is the right way to put it. But anyways, we'll get into this. So this was the play here. We gapped up the one day, closed at 320s or whatever, and then shot up to 1050 in the day there. So it's a pretty good setup. I'll just go back to that start and we'll kind of take a look at what happened here. Load for me.
Yeah, the volume thing is like how I confirm if the price action is like serious or not, right? Sometimes you get a giant gap in price or giant movement, but on low volume, I'm like, that's fake.
Yeah, that's something really important to keep in mind is like David said, if you get a breakout, on a stock that's breaking out to new highs or something like that, just look at the volume. I mean, if just throwing numbers out there, if the past month or so it's been trading 1 million shares a day, and it's at $10 mark, say for example, if it breaks out over the $10 mark and it's still only 1 million shares on that day, or maybe if it's even less, it's probably going to be a failed breakout because you can tell that it's broken new highs. So technically it's it should rip up, but there's nobody new looking at the play. Like it's not attracted any attention, so it's probably going to fail. It might not, but odds are it probably will. So that's really important. You know, if it's something like that, you'd want to see like, you know, 10, 15, 20 million like you want to see a big push on volume over a level. That's when you know people are interested, and then you can play off of it. So this was the day here. I don't know why it's not showing up right now. If I pull it up on the 5-minute candle. All right, I don't know. My chart's having a bit of a stroke here right now, but anyways. So we gapped up the one day, and then this is kind of pre-market right here. So you can see the time at the bottom. Down here is your volume. I have my volume like really big on the chart because I like to, you know, be able to see it really clearly. I use the 3-minute candles as well personally up here. A lot of people, like, I think it's pretty common to use either 1, 3, or 5 if you're day trading. It's probably the most common time frames. I know some guys that use all 3 of them. They kind of use them in conjunction with each other. One thing I noticed with the 3-minute candles is after playing with the 1-minute candles for years and years, there's a lot more fake outs. Like it used to kind of fumble me over myself a lot, and I don't like losing on trades because then it kills my confidence. I like to win every time. So
I'm there with you.
Yeah, so that's kind of what I noticed is on the 1-minute candles, it does give you a little bit more information, but it can be a lot trickier. Like if I see something on the 3-minute chart, then odds of it being confirmed are much, much higher than if I see it on the 1-minute chart. So I just switched to the 3-minute chart really not that long ago, maybe only like 4 or 5 months ago, and you know, it was a bit of a learning curve. Like it took me maybe a month or so to kind of really get used to it. I had the 1 minute and the 3 minute side by side, and now I only look at this. That's just personal preference. Like I said, some guys trade on the 1, some guys trade on the 5. It's up to you. So when it comes to support and resistance, it's pretty simple. I mean, all we're looking for is you just want to find a clear line where the stock has either resistance, you know, it's spiked up into a level and it stopped it and pushed it down, or support, it's bounced off a level or it's based on something. And you don't want to try and, you know, it shouldn't be hard to find these things. Like when you're looking for support and resistance, you got to think the more people that are seeing the same level as you, the more it's going to make sense, the more it's going to work, the more it's potentially going to hold. So if you're sitting there and you're kind of like, you know, looking at something, you're like, you know, maybe the line's here, I could probably maybe get a line in there. It kind of works. That's probably not a line you want to use because you need, you know, hundreds, thousands of other people to be using the same line as you if it's going to work. So if you can look at a chart and immediately just say, oh yeah, that's clear as day, that's a good line to play off. So that's something that I learned. So on this one, for example, here, again, this is pre-market. We have a bit of volume coming in pre-market. It's a gap up. This is a low float stock. So you can use these levels, pre-market and after hours, are definitely in play for the type of stuff that I want to use. And again, like everything that we're going to go through here, you can use on the daily chart. Like if this was Apple on the daily chart, it's all the exact same stuff. It's just a longer time frame. So what I would do, I don't play day ones usually for shorting, just because I don't, you know, these big squeezes and stuff here and there. It's a lot more risky, and I have a lot more success on day 2. So what I would do first is basically just work your way from left to right and just start drawing in any lines that you see. So, you know, first one I see right here is kind of this, you know, 560s area, 563 maybe. The reason I see that is, you know, 4 a.m. we got the first big push, and then if I zoom in on it here, you know, first big push, and then we pulled back, bounced kind of right off this 560 area, shot up again, and then it came right back down, bounced off the 560 area again, and then it kind of, you know, just kind of did its thing after that. So this first big push, you can see the volume here. Like the volume here is much higher than it was for the whole rest of this next hour or so. So this is important. If you're seeing a big volume bar into one of these levels, that becomes more viable because, you know, a lot of people are using that level. And then, you know, we just kind of work our way through. So, okay, we have our first, this would be a support line, right? Because the stock's over top of it. Next thing you want to do is kind of look for tops, right? Resistance levels. And you guys can draw these in wherever you want. You know, you can play them however you want. The biggest thing is just to know where they are and be aware of them. Because if you're playing the long side, you want all your resistance levels in because you want to know where you're going to want to sell into. If you're playing the short side, you want to know where you're going to short into and then also cover into, right? So, you know, line to line is really the kind of terminology that I like to use. Is just everything in between is just noise. Just play off the lines. You know, if you're going to shorted a line, pick the line. Don't short in the middle, because in the middle, it's just all noise. It's garbage. The next line here that I would see personally is right around this 650 area. You know, we had these two little wicks up to like 675, but you know, it didn't really push up to there very hard. And then over here again, you know, checking volume once more, you can see this is a bigger green candle right here. So this one, it had a tall wick. So when I see a big top wick like that or a bottom wick, it just indicates a lot of pressure on the side of the wick. So to explain that a little bit more, if I see a big top wick, it means what happened is this stock shot up and there was a ton of selling pressure that just hammered it back down really fast. Exact same thing on the bottom side. You know, if you see a big bottom wick, that means there's a ton of buying pressure. So for me, if I see something like that, you know, not in this case because I don't trade pre-market, but if this was near something that I was going to play, that to me is a really good indicator that, you know, this is where I might want to get short because there's a lot of selling pressure on top of that. So I would use that, the 650 area. You know, 650 is a line right there. Whole and half dollar marks are always, you know, kind of key levels. Everybody thinks, you know, oh, I'm going to sell it when it gets to $10. So I'm going to sell it when it gets to $11. I'm going to sell it when it gets to $11.50. You know, nobody really, for the most part, is like, yeah, I'm going to sell it when it gets to, you know, $11.23, $11.27. Like, you know, like people don't really think like that. So yes, down here we have a line at 563. But every time I play around these personally, I always like range it a little bit. So if you're going to dip buy it, you know, it's probably a good idea to maybe put an order up here at, say, if you're trying to dip buy off this 563 line, maybe throw a buy order 1/3 size, 575, one right on the line, one a little bit below, you know, kind of spread them out over that line because it will wick through, it'll wick down and, you know, it'll wick up a little bit. It's never going to hit dead on that line perfect every time. So, you know, it's good to leave a little bit of breathing room. That was a big change actually playing these over NASDAQ. I always joke with David about that because I always say, you know, when I first started trading, it was when OTCs were still really hot. And it only took me 3 months to learn how to become profitable in OTCs. It took me another 3 years to learn how to become profitable in NASDAQ when the OTCs died out. And that's a big reason right there is because in OTC markets, it is going to hit right on that 650 line to the dot. Like they're so much more tight to their numbers. It's really, really easy to read those ones. But they don't really come around too often anymore. So I just don't even worry about them. So hope I'm not going too fast. Let me know if it sounds like I'm going too fast.
Yeah, in the comments.
Mm-hmm.
I want to point out though, like, it happened to me when I first started too. When I started drawing support and resistance lines, they're pretty obvious to find after you find them for a while. But like when I first started though, I always thought like if that's support, I thought that was support. It's not going to break that line. Like no, it could break. Like
yeah, for sure. Yeah, the key is like the biggest thing to remember is just look for the really, really clear lines. Like, you know, I've shown some of my friends who are like just starting to get into stocks. I show them this stuff and they can see it right away. Like, oh yeah, I know that makes sense. And I'll ask them like, where do you think the line is here? And they'll point it out to me. So, you know, it's pretty easy to see once you've looked at a couple charts. And those are the ones you want to use anyways. You don't want to try and, you know, draw like in between here. If we zoom in again, like, you know, I could draw a line here at 630 on this top and say, okay, it kind of hit here, it kind of hit there. I could maybe draw a line at, you know, 585 because it's sort of bottomed out here. But like, if you're doing that, nobody else is going to see those lines, right? Everybody's going to look at this and say, okay, well, you know, it pushed up, it topped out here, and then it topped out again, and same on the bottom. It bottomed out, and then it bottomed out, and then it just kind of stayed in here. So just pick the ranges and then use the top and bottom of those ranges as your line. Because if you're playing in here, or you're trying to dip buy in the middle of this or short in the middle of this, you know, there's probably not a lot of people that are doing that. Everybody else has probably got their orders up here and they're waiting, right? It's whatever's really clear to you is going to be clear to everybody else, and then it's going to make the line a lot more viable. So I'll come over here. Again, I'm just moving through the day here. So keep an eye on the time frame at the bottom. You know, we're still pre-market. So 7 o'clock, 7:30, 8, you know, 9:30, obviously when the market opens, you get this big candle. But we'll just, you know, we'll go from up here. We'll look at the top. So, okay, we had, you know, 650 was our previous high over the pre-market spike. And now what happens? You know, we get this big push right through it. You know, it kind of plays around it for a bit and then it takes right off again, rips up. So where's our next level? Could probably draw one right at the top here, right? right up at the top, 850. Again, whole and half dollar marks are always really, a lot of people play off those. And then we got another candle here. Again, look at the volume. We had really big volume coming up into the spike, kind of died off, and then we had another big volume on the red candle, and we got that big top wick. Again, showing that selling pressure. Next line, okay, we kind of bounce off this 775 area, comes down, bounces up into the 775 area, comes down again, bounces up, touches that exact same line again, 775. So to me, that kind of makes sense, right? Like, we got pretty good volume up here. It bounces off that after a big spike, falls below it, and then it comes up and hits it, fades to newer lows, and then it pushes right back up, hits that same level again. So to me, that makes sense. Like that's a line that I'd be interested in, 775, 76 right. So all this stuff. Sorry, yeah?
Sorry, I just wanted to say that's a really good example of, that old adage where it's like previous support will become resistance and previous resistance will become support once you break through it. So that one like broke through the support and it came back up to retest it, and like, yep, that support is now resistance, and it kept selling off from that point.
Yep. And the more times it hits a line, the more that line becomes viable. So, let's say in pre-market here, we have something like this, it comes up, bounces off this line, goes below it, hits it, drops down, hits it again, and then maybe it drops down a bit, and then it comes over it, and then it bounces off of it, and then it bounces off of it, and then it goes below it again. If it kind of really draws a really clean line like that, that's a line where once it gets on either side of that, if it's way above, that's a really good spot to dip buy. If it gets below, that's a really good spot to short. The more times a line's hit, the more clear it becomes to everybody, the more people are going to be watching it to put their orders on it. And if the stock's below it, a lot of people are going to be wanting to sell into it or short into it. If it's above it, a lot of people are going to want to be cover or buying. So you just got to think about what everybody else is thinking. It's one of the big things that a lot of people don't really think about is, you want to try and know what the masses are doing, because that's what the stock's going to do. So, off the open, we get this little wick into the VWAP line, and then the stock just kind of tanks out of the open, right? But again, if we look, where did it kind of consolidate? If we go back to the open here, the pre-market, right up at 650, right? That was our, quarter after 4 a.m. That was the line we drew. And then we come over to market open, we get tank off the open, and then it kind of consolidates right on the 650 line. So like these lines do become important, everybody's looking at them. It's the simplest way to play charts. And then look, it comes down here, and then where do we bounce? Within, what's our low there? 563. So, literally to the penny, 563 on that line we drew. Bounces off of it, comes up to, 615, whatever it is here. So, this might be somewhere where you want to dip buy, right? This is our low from pre-market, and then tanks off the open, bounces right off that low, right? So like, I don't play this. I don't play these moves personally. Like I said, I play day twos, but you can play these any way you want. The biggest thing is just whatever line you're going to play, just stick to it. Like have a plan, whatever your plan is. I mean, we've drawn 4 lines so far, so you can set up whatever kind of game plan you want on these lines, but whatever it is, just stick to it, right? Like, I mean, there's always a lot of chatter on Twitter, and I find it gets really messy if you're paying too much attention to it. I got lost in that too when I was learning. I'd be looking at stuff, I'm learning, and I'm just focusing on one pattern. Maybe it's something like this where I want to dip buy off of, the pre-market lows. And then, somebody says, oh, I'm going to dip buy it off $6, right? Because that's a good number. And then a couple other people say that, and I'm like, oh, well, maybe I should dip buy it off $6 then. And then I'll try and buy it here, and then it fades down, 40 cents. And then I'm like, shit, and take the position off because I'm underwater. And then, bounces right off the line that I thought it was going to. So, just whatever plan you make, just stick to it. Whatever risk you're going to have under this, if you are buying off 563 and maybe you're going to risk, it might come down to 550 because that's the $half mark. Maybe you're going to risk, 542 or something, for example. Just stick to that. I mean, if somebody else says, my risk is 553, and then you're like, oh, well, they're only risking 10 cents. I'm risking 20. So I'll do that and I'll double my size. Well, what if it wicks down to 553 in a split second? You lose, and then it bounces up, 50 cents, right? So just stick to your plan. I mean, if you're beginning, like, it's going to take you a while to come up with a good plan. You might really not know where you should risk, but whatever it is, just stick to it. Because if you're in the middle of a play, somebody says something and it's just gonna stress you out. I know it did to me, and it made me lose a lot of trades. It wasn't until I just ignored all that stuff. I don't even look at Twitter until the end of the day personally, because I'm usually trading stuff that other people are trading, and they usually have a different way of trading them than I do. So I don't need to pay attention to it.
No, that's a good point. I actually try to avoid Twitter for stuff that I want to trade because I don't want it to influence any of my thoughts. I want to reach my conclusions and everything independently.
Yeah. Yeah, it becomes a lot less stressful too. You just block it all out, have your trades. Like, I'll look at it, like on the weekend or like, before market opens to see what people are kind of talking about. But if I'm actually making a decision, I'm not listening to anybody. So we'll just keep kind of running through the day here slow, just so we can see how these lines that we drew before market open kind of play out, right? So, and you can draw more through the day. Like, maybe you want to put one here. We kind of perked up a little bit there, and then we bounced into it again. So like maybe this becomes a line, I'm not sure. 616, let's just draw it in there and see what happens. So here, like David said, it doesn't mean it can't go below the line. So you get one bounce, then it tanks through. That's a really important thing as well, is usually you only get one shot on these things. So if you're trying to dip buy off a line, do it the first time. If it comes down to it again, your odds are probably cut in half for if it's actually going to bounce again. So just take the first one. Same with the short. Here, if you're trying to short up into, I know I just drew this line, but let's say it was there. You're trying to short up into 616, short it once and then cover. If it comes back up into it again, you probably don't want to take that shot, because that's, you're hitting it twice, it could break through. First shot's always your best shot. So here, we kind of get stuck under 563 for a little bit, keeps bouncing off of it, and then we break through again. That's basically a good example right there, what I was just saying. It comes up to it here, and then you can short this level, and then it hits it again, and then it comes through it, right? So your odds just kind of go down the more time it's hitting one level. This one here, so this 616 line that we drew isn't really viable based on this spike here. So 650 though, that was the one that we drew. Again, I think that was the pre-market highs if we go back. Yeah, so that was our pre-market highs right there, 650. Or not our pre-market highs, sorry, just our first spike. 4 a.m. spike was 650. And then that's basically where we bounce up into. Our high was 645. So we're 5 cents from the top. And that, again, that's kind of what I was talking about with those wicks. So, if you put an order out at, 640, 650, 660, just around that line, and it comes up to here, at least you get a third of your position on, right? And then it comes down, and I'm just going to take this line out of here. So say you get a starter position on here, 640, a third size, that's great, Comes down, where does it bounce? Right off that same line, 560, 563, right? And then we come up again, and look at this, right? So we hit it once, hit the 650, bounce off the 563, and then what happens the second time we hit it? Blows through it, and it goes to the moon, right? That's why, again, always just take that first shot. Don't push your luck, because the more time it hits something, your chances are going to go down and down and down. This is actually one of my favorite long patterns while we have this here. It works really well. It works on low float stocks, like the lower the better, 3 million, 2 million kind of. But what I look for is something like exactly like this. We have a big spike in the morning, stock looks dead, right? We're down here, it's below VWAP, it's been selling off. It was at 850 pre-market. It's just been tanking, big volume, lots of selling. And then you get this little perk. See the volume down here. Again, guys, remember to keep an eye on the volume. All midday, really low, right? You get these kind of little pushes. Every time you get a bit of a volume push, you're getting close to a line, right? Because why is that happening? Because people are looking at these lines. More people are trading close to that line, right? That's what you want to see. You want to see everybody playing on your line. And then we get over here, volume comes up. Now we got even more volume. So we're up to, these are the 3-minute candles again. We have 1 million volume on 3-minute candles, right? Back here, we only had 500,000. So we're getting more of a push up into this line. And then we sit right on top of the VWAP right there. That's where, if this happens, you can go long real big. This is probably one of the best long setups that you can play. Really low float stock, ideally. If it's 1 million shares, buy more. If it's 5 million share float, buy a little bit less kind of thing. The lower the float, the better. But if you have something like that where the stock is just dead all day long, and then, in the afternoon, you get this little push and it sits over VWAP on higher volume. Remember that, it's very important. just, this is where I would just pile into it. And then you can see here, you get this absolutely massive squeeze. You could buy in here at 650 and, sell up into $10. Like that's a huge move in, what is that? 1430, about an hour, right? So you make 80% in an hour. And then again, like, look at this, we had our 776 and our 850 lines from pre-market, and look what happened. We had a little bit of consolidation on that line, right? Why is that happening? Because people are trading right here. There's probably people selling into this line because they knew it was there. There's probably people shorting here because they think this is the top. All the people that shorted there, what happened on this big candle? They got blown out because it went up to the 850 line, right? And then again, as soon as we hit the 850 line, you have more volume again, and then it kind of comes down, right? So this just shows you that people are using those lines. That's really good. If you can see a little bit of consolidation or something around your lines, that means that you're picking the right lines. And this is something you guys can just play with, right? Exactly the way we're doing here. Just find a chart that moved, close your eyes, whatever, scroll back to the beginning of what had happened, and just drag the chart over candle by candle, draw your lines in, and then just see how the pattern played out and see if your lines actually lined up with things like this, with higher volume, with tops, with consolidation. And if you can do that you can do that on a weekend and just go through 100 charts, right? So it's not something that takes a long time to get used to. You can just, rip through a million of these things. And if your lines are all in the right spot, you're seeing volume near your lines, you're seeing, tops and bottoms and consolidation, then you're making the right decisions.
And going back to what you were saying earlier about keeping it simple, like when you first start getting into this stuff and looking at charts, you're probably going to start drawing a million lines because they're just going to pop up everywhere. You start to see a million lines. But then what you eventually want to do is be able to separate what's noise and what's actually a signal. And you want to recognize all the lines, but also recognize which are probably the most important lines, and those are the ones to focus on. Right. Because you probably start off with a chart with like 50 lines, and you're like, yeah, well, this connects here and that connects there, but then that's not useful at that point.
Yeah, I still do that sometimes. Like I'll be sitting there and like some, this one's pretty clean, but sometimes they're a little bit messier, right?
Yeah.
And I'll be looking at it and like I'm drawing them, and then like I'm looking at it and I'm like thinking where I want to enter, and I'm like, fuck, this is way too busy, man. And I'll delete every single one of them, and I'll kind of like just look back and I'll be like, okay, what do I immediately see? Like this one, and this one. I'm like, all right, I'll just use those ones. Right? It's whatever's really, really easy to see is the ones you want to use, because that's what everybody else sees. And then it's clear here, right? I mean, we went from 660 to 675. Like that's it's a $1.25. That's a huge move. You have 1,000 shares there, you just made $1,200, right? So, and that's in 6 minutes. And look, it's just straight green in between because there's nothing in here. Let's go back. So what did we have in here? We had this top out of the open, but this is all like, it's relatively messy in here, right? You can draw, like I can say, okay, this was a base. Sure. It kind of fluttered through it and then it kind of pulled through it again. So it's not a great one. It topped out here too. So yeah, I mean, you could draw a line there, sure, but it's not super clear. It's not like this one where you had this huge move and then that's where it bounced off of. And then that's where it tanked through, and then it hit it, and then it hit it. Like that one's a lot more clear, right? So that's kind of what we're saying is you can busy these charts up really bad with a lot of lines, but it just keeps it really simple. The less you have, the easier it is to play. And I think this is a pretty good example of that. And again, sorry, go ahead.
No, I was just going to say, and these are only horizontal lines. Like you could draw diagonals too, right? So it can get really stupid.
Yeah. I've never had with trend lines myself.
No, right? I don't know if you've ever heard of that. There's a trader, Peter Brandt. He's like one of the legends. And I'll follow him on Twitter. And just a couple weeks ago, he was complaining. He's like, he only likes drawing and playing horizontal lines. And he's like, he noticed, because he's been trading since like the 60s, right? He noticed as soon as algorithms started trading more, he noticed diagonal lines started showing up. He's like, that never used to be a thing before. But for some reason, when algo showed up, diagonal started making a play.
Okay.
And he says it screws him up. It screws him up a lot. Yeah. But he's at a point in his career where but I do a lot. So for some reason, I love diagonals.
Oh yeah?
Yeah. And then he's like saying like, because he doesn't really need to trade for money now. He's good, right? So like he's like, because the diagonals throw him off, he plays very rarely, and only when it's the horizontals that work. Yeah,
I've noticed the horizontals always seem to have a bigger move too. Like
they do.
Because like the tricky part, and The only time I guess that I would use a diagonal line is like the standard ABCD setup. I think we went through that with one of our first podcasts. I'll draw my diagonal line down because as soon as it breaks that line to the upside, that's when I'll go long. But what I'm doing is, if you look at the ABC, you have one big top and then it comes down. You have a smaller top, it comes down, and then you have the third top. So I'll use those tops as my horizontal lines to sell. So usually what I do is I'll buy when it breaks the diagonal line, and then I'll sell a third into the first top, and then I'll sell a third into the high, and then I'll hold that last third for the push if it just rockets out, right?
Yeah.
Because I mean, if I'm buying on a diagonal line, there's immediate resistance, like right, from 10 minutes ago.
That's right. Do you mind changing share screens?
Sure.
I'm gonna show mine. Unless you got more to, you're good.
No, I mean that was pretty much it. Yeah, I was just gonna kind of run through it. But I mean, yeah, if you guys take a look at that, I mean, I don't know when you're gonna watch this podcast, but any kind of stock that runs like that, just take a look at them and do what we did there. Just start at the far left side and draw your lines as you go. If you're seeing that your lines are getting hit, they're getting rejected, there's volume on them, then you're making the right decisions. And then all you have to do is just figure out how you want to trade them. I mean, everybody trades them differently, so just come up with a game plan. But that's the easiest way to keep it simple. And simple is, contrary to popular belief, it's a lot easier to make money if you're very, very simple with your charts. You don't need 1,600 indicators to tell you what to do.
Oh man, I got stories, man. Like, so I have a different chat just for like crypto guys from back a few years ago. There's a couple of us, and then so we all started with Elliott Waves. I don't know if you've heard of that.
I've heard of them. I've never used them.
Fucking biggest scam in the world. Like, I think it may have worked for the period it was designed in, because it's a strategy. It's a pattern recognition strategy based on psychology. But I think the problem is, as soon as computers and algorithm trading and other more advanced strategies came in, because it seems to be really good at looking at psychology, but then once psychology is not as much of a factor anymore, it's not accurate anymore, right? But what happened with Elliott Waves is like, it's such a flawed system because you can never be wrong. That's why I gave it up. It's garbage because so it believes in everything called waves. It believes in waves, right? So like if a stock is in a bull market, then it'll do 3 waves up, and it's always 2 waves down. So it's always 3 waves up and 2 waves down.
Okay.
And then you can use fibs to decide how far up and how far down these waves happen, but that's basically the structure of it, right?
Okay.
But the problem with Elliott Waves is that they have waves and they have subwaves and they have macro waves. And then so what happens was, let's say you're on the daily, right? You see what's obviously a 3-wave pattern. And then you look at a 1-wave consolidation. You're like, oh shit, it's doing a 1 way. It's got 3 waves up and 1 wave down, so it's probably going to have one more wave down and then continue on, right?
Right.
But then if that last wave doesn't happen, it doesn't prove the system wrong. The system tells you, it just means that there's a microwave that you missed, and then now it's a smaller, and it starts breaking it up. So basically, yeah, exactly. There you go. Thank you. Yeah, Sam learned a little bit of Elliott Wave with us too. It's just so ridiculous. Like, so basically, so those large blue numbers are the macro waves, and then the smaller numbers are like the microwaves, and then you can even get them even smaller, right? So basically, every time you're wrong, you're not wrong. You just mistake a larger wave for a smaller one, and so you could always use like hindsight to prove that you were actually right. You just didn't recognize something. So it's like,
yeah, that doesn't make sense.
No, right? So it's like, if you have a strategy that can never be wrong, then how can you ever trust it? There should be a clear line of this is right and this is wrong, and then that's how you play. But if it's never technically wrong, then
Yeah, that's why I like the simple indicators. Like you said, the 50-day moving average. Like if I am doing swings or something like that, it's just, I'm not using it to play off of. I'm not using it as like, I'm going to enter now because these 2 indicators are crossing over. I'm just like, I can look at it quick and say, okay, it's over the 50-day moving average. It's probably relatively bullish. That's it. Yeah. I mean, I'm gonna make the trade based on the chart pattern. That's just kind of like a 3%. Like, okay, yeah, I think I'm making the right decision. This thing lines up with it. That's all it is.
Yeah, I think that's the key. Like, Elliott Wave gives this false sense of certainty. It's like, oh, it's starting to make sense. It gives you this false sense of certainty. And then I think that's why traders get chewed up, because there's nothing certain in the market, right?
Yeah.
Whereas like if you keep it simple, it's like, like exactly like you said, it's probably here, it's probably there, but if it's not, then you use money management and bet sizing to kind of hedge your risks, and right, like that's the more important part of trading, not like certainty.
Right. Well, I was listening to an interview with a guy, and he said he had a good point too. He said it was exactly what we were just talking about. He said the only indicators I use are the one that I know most people use, which is the 20-day moving average, the 50-day, and the 200.
Yeah.
Because he's like, I know that most people use those indicators more than any other indicators. So if I can play off those, I know that there's a larger quantity of people that are playing off them. So it gives my trades more credibility, I guess you could say. Whereas if you're using, like you said, like an Elliott wave, and there's like 16 different wave cycles inside the one wave, I mean, how many people are really going to be looking at that one little cycle you have? Exactly. And then it's useless, right?
Yeah. And the other thing that like bothered the crap out of me about Elliott wave was like, I would spend hours drawing this shit, like, because you got to go from like the weekly to the daily to the hourly to like the minutes, because there's waves on every. Yeah, because there's waves on every time frame, and I'm drawing, and there's I can show you the tool on TradingView. So like, you spend hours drawing this whole masterpiece, and then as soon as the price action does something you don't expect, it's all done. It's all garbage.
Oh my god! I just sit there and delete everything and start again.
It's like, son of a bitch.
Yeah, yeah. The next day, a market opens and it just throws out 10 hours worth of drawing lines.
Yeah, and the funny thing is, like, so I'm still the only one in the group that just gave it up, right? I guess it's hard, like, once you've invested so much time learning something, it's hard to say, like, but like every once in a while, yeah, exactly. And then every once in a while, a guy in a group will pull up a chart. I'm looking. I'm like, I don't even want to look at it. Just so many disgusting lines. I'm like, what the fuck? I can't dissect this shit. Like, I'm like, listen, I have one line, one price. It's there or it's not. I don't care. Like, whatever you're doing, like.
Yeah, exactly. Yeah, I can get some people's charts I see, man. I look at them. I'm just like, I don't even know what the hell I'm looking at right now. Like, yeah, there's these 6 indicators are crossing over, and you can see the volume is doing this pattern, and there's this over there, and these indicators are diverging, and I'm looking at it. I'm like, that just looks like gibberish to me.
You know what I even saw once? I know some people do this, like the moving averages. Like, how like most people use like the 20, the 50, or 200, one or maybe 3 of them.
Yeah.
There's some guys out there that'll put like 6 on there. It looks like a fan.
Yeah.
And they're like, whenever these ones cross over, then that's when you get in, and when they cross, you know what I mean? Like, it's just a crazy strategy, but like,
yeah,
the moving averages.
I always found that kind of tricky. Like, I guess there's a way to do it, but anytime I looked at those, anytime that they seemed to cross over, it always seemed like it was too late.
Exactly.
Like, by the time I could actually see the lines cross, like, it had already spiked up 30% or something.
Yeah, if you're waiting, like, how people are always talking about the death cross, oh, it's going to go to the death cross.
Yeah.
By the time you see the death cross, it's already tanked. Like, the thing's already tanked. It's over.
I know. I don't know. Maybe they just play it off the actual chart pattern, and then, they're already in because they're reading something else, and then when it comes down, it crosses them, and then that just gives them their confirmation. Maybe that's what it is.
I don't know, man.
I don't use them. Like, I mean, you guys see what I do. I draw lines that I see. That's it. I'm boring.
I honestly think, like, because we listened to that other podcast, Chat with Traders, it's a good one we could recommend.
Yeah.
Because, like, I think the consensus of all the traders on there, it's like it's mostly bet sizing. Like, most of them don't even talk about their strategy because it's almost irrelevant. Like, who cares what strategy I use? It's like how you manage risk.
Yeah, 100% it is. That's the biggest thing is you can make money in any way in the market, but it's just, whenever you're going to lose, just make sure you don't lose that much. Yeah. Everybody loses.
Yeah. Sam, do you mind pulling up my screen? I just want to show the fib retracement because this week we had some really interesting price action, and I just run a really quick fib through a couple of these assets, and it worked out super, super well. So this is XPeng on the daily. So there's my diagonal line. This is why I love them. This is why I love them because they're always like this. So for me, this would have been a buy area for me. Like if this happened like here, the diagonal would still play, and this was like 20 seconds. So it's like or beginning of the week. I would have drawn the diagonal, and if I didn't have a position in this thing, I would have put my buy orders around here. So I'm using a mix of like probably where the horizontal would be and where the diagonal would be. So that would be my spot.
You probably change those day to day, right, as it went further away.
The diagonal, no, I would leave it.
No, like I mean your orders. Like if you're like Like if it went further, if it went 5 days away, then your diagonal line's lower, right? So you'd want to adjust those orders.
Yeah, but the thing about diagonals is it'll get to the point, and it goes in both directions. It'll get to the point where it's almost irrelevant. Like if we're all the way over here into like August, that diagonal is just irrelevant. Like I don't see the price taking to like $5. So like for me, like diagonals are like a short term, almost like a short term support resistance that have an expiry date. There's a certain time that passes that they just become useless.
Okay.
But yeah, I was just gonna say like so on the 12. You know how like before I told you I like to hide indicators on different time frames.
Yeah.
So my daily looks kind of clean, and then on the 12-hour one, I've got a couple indicators here that I hit. So this is the fib retracement. Whoops, what did I just delete? So this is the fib retracement. I'll pull that out again, and this is the fib extension. So like if we're, what the hell do I keep doing? So if we're going like before, trying to figure out where. So I like using the fib extension tool. So if we look at the previous high with this swing, with the first swing low, the absolute swing low, and this swing high, you get this. You get these fib extension numbers, and look, the price actually bounced right at the 1.27. So usually 1.68 is the target, and if you look at it, it kind of coincides exactly with this cluster of price action. So this would be a support area because a lot of people definitely bought it and sold here. But this area, the 1.27, look at it, it lines up almost exactly at this area too. So I don't know why these fibs work so well, but I mean they work, so that's why I use them. So if I was trading this thing and I'm like a few days earlier, like around this area, I already have these 3 points. So I would have made these 3 points and I would have just waited. I would have put a buy order here to see what would happen. It's $25, 40 cents. Or 20, 25, 30. So that would have been an area for buy order for me. And if you did that, you would have had from swing low to swing high 50% gain on your trade. And that makes perfect sense too, right? If you did catch it at the bottom here, you'd want to sell around the 50% mark, and that kind of explains why it sold off exactly there, right? And then so now that we're here, what I would do is I pull down the fib retrace. So again, the swing high to the swing low, right? So I would start expecting. I actually did set a bunch of sell orders around this area right here, in the $43 and $44 zone. Right. So look, it bounced off almost exactly at the 50, and just sold right off. So that's why I like using this fibs a lot, because I almost never. I just noticed actually I almost never draw horizontal lines anymore. I just use fibs for my horizontal, and then I use diagonals. I just realized that.
It's funny though, like you could almost do it both ways on this chart. Like if you look at where you did your first fib when you pulled it down, like from the swing high to the very low there, the very first one, that bottom lines up almost right with that top as well where you were selling, and then down there is where you dip buy, and that would be your high, kind of like in the last chart we looked at. Let's call it your pre-market high, right? Yeah. So you get that horizontal line, and then the top where you would have sold into off of that, right there. Yeah. Sometimes with the low from what, a couple months ago or whatever, right?
Yep, right there.
Yeah, exactly. So
it just goes to show, like, all these tools, a lot of them kind of overlap. So like, there's really no need to start drawing fibs and then horizontal numbers, because a lot of them just start lining up anyway.
Yeah, well, it just gives you more confirmation, right?
Confirmation with a really messy chart. But that's why they're like, this is like one of the most underutilized tool, the fib retracement. So I'll show you Tesla too. Like all these charts. Oh, that's messy. I get rid of that. Yeah, because I noticed Tesla was trading in a zone right now, and let's see, let me get out of here. A little bit cleaner. So yeah, like Tesla bounced off the 50, sold off at the 2.3s, and then bounced off the 3.8. Like this is a fib that I put there weeks ago, and it just keeps playing within these zones. So this is a buy zone, and my next target's going to be a breakout. But I was just going to say, like, even on a smaller time scale, because this is on a daily, but even on a smaller time scale, in just this cluster of price action, blind, I could do the swing low to the swing high, and look at that. Tesla bounced off today right at the 618. Right? That the days earlier, it bounced right off the 50, went up, got rejected. So what's the next target? 618. If it gets rejected here, I'm expecting it to go down to the 7.8 level. So it's going to be 570, 575, like would be a buy zone, right? And then the same thing like NVIDIA too. So I had these fibs earlier, but if I get rid of them, clean it up. Like even if I'm just playing this little price cluster, again, swing low, swing high. Look at that, 618. Like this is that's also why I highlighted the 618 of all the numbers. This is the most important number. Time and time again, these prices retrace to this level, and it works backwards too. Usually, so like instead of going from swing low to swing high, I can start from swing high to swing low, and we can see how this plays out. Right? It bounced from here, got rejected by the 50, came back down.
Yeah.
So this would have been a target, but 50s are a pretty decent target too. But this would have been my ultimate sell area. It's just a really interesting tool. So because of this, you can see like I use my I play with triangles a lot, but most of my charts you almost never see horizontal lines anymore. I just use my fibs, and it works in like higher time frames too. So I did a quick fib extension there, which I should probably change because we have a new swing low. But yeah, so like if NVIDIA ever breaks out, my sell area would be right here, the 665s area, because it's going to be a new price area. It's never hit that price before. So the only way to kind of like get a feel for where people might sell off is either psychological numbers like we were talking about earlier, or I would use these fib numbers.
Yeah, I mentioned that last week, and when I was playing around with these in mine, is anytime we're breaking out to new highs, I found them pretty useful to find areas to short into.
Yeah, see, I drew a horizontal there, but I didn't even need to. It's right to 50%. Right. Bounced right off the 50%, off the 2.6, off the 3.8, and now we're looking for breakout. So I drew this weeks earlier. I love my diagonals. I drew this weeks earlier. And I'm just and this is like, and so I drew. I don't know if you remember, but I showed a chart a long time ago on Instagram. I drew that line. I said this Tesla was going to break out of this rising wedge and it was going to go down.
Yeah.
And then I drew these lines here, and that's how I'm going to predict it's going to happen, assuming the market sentiment doesn't change, right? Because tomorrow the Fed could come out and say something crazy like, "Hey, we're raising interest rates." That changes the picture completely. Right. But if the overall market, the picture doesn't change completely, I say the price is going to bounce within this range, consolidate, and it's going to break out probably around June.
Are you doing this on like any stock that's moving, or are you only doing this on the ones like that you're actually researching?
Only the ones I'm researching, but I could do this for like.
I just think that's kind of an important point to note is that people shouldn't just kind of try and dip buy something that's spiked up based on Fibonacci lines because it could be a crappy company. It could just.
Oh yeah.
Well, I want to bring that up.
Yeah. That's a good point. Yeah. No, I only trade companies like I really like. So, see, this one's concerning me. I drew a horizontal line because there's a little bit of a divergence. So the price, the RSI is coming down on higher price action, and so that's called a divergence. And then so a lot of people trade immediately as soon as they see a divergence, but that's actually premature. What you want to see is, because what RSI is basically a momentum indicator, it's showing the momentum is slowing down even though the price is going up. So that's one sign that this rally is starting to weaken. But you don't want to like short it until you have a break of this trend. And then now today we're having a break of the trend. So now like I'm thinking the next buy zone is probably here about $1. So if it does break down, like what's it going to break down? It's like 45%. This would be a nice buy zone.
Be a good short zone right now for me.
Yeah, this is actually this might be up your alley, man. This is $400 under $500 million. This is a little small cap, little micro cap there.
Perfect.
Volume is 1 million shares. That's not bad. Yeah. Nouveau Monde Graphite. Yeah, they had quite a bit of a rally. Cliff, they went from 18 cents to $1.70. They did like 100% or 1,000% move in 6 months.
Yeah, that's pretty awesome. Yeah, the same graphite, like industrials and stuff, are all apparently supposed to be pretty big this year, like over tech.
Yeah, I've been hearing that too. I think the consensus is the environment's moving towards commodities, especially in a high inflation environment. So you want to get copper, you want to get graphite, mining, whatever, stuff like that.
Yeah. Iridium, all that kind of stuff.
Yeah. I just had a couple of things, a couple of graphics I found earlier that I thought would be interesting. Speaking of less trading, but more investing. This is the 2020 returns for, they call it the Fantazium Stocks. So like the Facebook outfit, Netflix. I guess Fang is like it no longer.
The acronym for it.
Yeah. So we got Zoom, we got Microsoft. So we got the heavy hitters, right? We got the returns. The big one, Zoom, 400%. Tesla's 300%. 2020. The S&P did 4.5.
Right.
So the average stock in these, the average price in these. So this is why I think like, stock picking is a big deal, right? The S&P did 4.5. Meanwhile, you would have more than doubled your money had you put it in, an average or a group, and just spread it out among these guys.
Right.
But here's what I thought was really interesting. If you looked at price to earnings, a lot of investors, old school investors, like, oh, that Tesla's got ridiculous price to earnings. It's overpriced. It's too expensive, right? Because the average for the S&P is 24.3 PE ratio, and even 24 is actually considered expensive for S&P. Like traditionally, it's supposed to be around 20. So the S&P is about, so the entire index of the S&P is about 20% overvalued than it normally is. And even then, if you look at Tesla and Zoom, it's like, what the hell, right?
Yeah.
But here, this next ratio is the one I want to talk about. It's the price to earnings divided by EPS, earnings per share. And you want to see a number below 1. Numbers below 1 are actually showing that there's value. And Tesla is actually in the value category. So if you actually
per share is so high.
Because the earnings per share is so high, the price per sales, look at that, it's huge. And they have crazy sales growth. So like if you look at quarter over quarter, their earnings are just continue because Tesla's only demand supply constrained. So as long as they have supply, people will buy it. So every car they make is sold, right? So the more cars they make, the more money they'll generate. So that's why they're like the ultimate growth stock. So like I just wanted to show this to make the point that if you're only strictly looking at earnings per share, you're getting like a tenth of the picture, right? So especially for investing, it's really important to look at all the other metrics too. They're undervalued in the PEG ratio area, right? Because Apple's like a great company, great earnings per share, but their growth is pretty steady and kind of slow because it's just so big at this point, right?
Right.
So at Tesla is what you want to see. Alphabet's still kind of growing nice. Amazon's doing quite well. Facebook, right? So there's different metrics to kind of look at with these ones.
What do you think about the new Apple electric car that I keep hearing about?
I'm confused why they want to do it. You know what? I forgot what analyst made a good point about Apple cars, because the argument was that it's a growing market, especially if it's autonomous driving. So Tesla makes like a fleet of cabs or like low cost cars or whatever it is, right? And then they're like saying like, well, Apple could take over the interior of the car. They could sell you software or whatever it is. But I'm like, but here's the counter argument that I thought was really interesting. Like they're like, but Apple, but why would having a computer in your car be worth any money because you have a computer in your pocket, right? If you want to buy software, just buy it on your phone. You're in your car anyway.
Yeah.
So I don't know.
Pretty much any new car you buy now has Apple CarPlay in it, like preloaded. Yeah,
exactly. So like I don't know. They must see something that nobody else sees. Like it's, and they must think that there's something they can do that nobody else can. I can't figure out what it would be.
Yeah, I don't even know how far along they are. I've just kind of like heard chatter like here and there that this might be happening.
Well, they haven't admitted yet. So
no, I've just been like hearing like little whispers here and there that this is probably going to be a thing.
I wonder though if this is going to be one of Apple's failed projects or like one of those ones that was like a dead end. Like remember for a while they wanted to make an actual Apple television, but it ended up just being a box because they thought they could make a better television.
That was years ago.
Yeah.
Yeah, that was a long time ago.
Even Steve Jobs, like it's a little hobby project, it's a little side project. Yeah. It never went anywhere.
Right.
So I wonder if the car might be that kind of thing where it's like they'll experiment with it. It's a curious industry, but kind of just fizzles out.
If I picture an Apple car in my head, I just picture something like really round and white.
I know, right?
I don't know why. I just picture this little like round white blob going down the road.
Can you imagine they literally take the Apple icon and make it into a car? You just driving that.
Yeah, like that's all I'm thinking of. Like this little round thing just going down the road. It looks really unfortunate.
It'd be like a little taxi Apple fleet, like just easily visible. That may be pretty cool. But Sam, you might show up. I just have one more infographic to show up. Awesome. So I was reading. There's an analyst firm called Fundstrat, and they're actually one of the hottest analyst firms right now because they've been right, like bang on when most people were wrong. And they were saying that their outlook for stock picking was that you should look at stocks that millennials like. Look at stocks or brands that millennials like. And so these are the top ones that I could find, like so Apple, Amazon, Tesla, Facebook. I don't know why Berkshire's there, but
that's kind of weird.
Yeah,
isn't
the
the price like 300,000 a share or something too?
Like 330.
Yeah. The hell kind of millennials got that kind of money?
I know. Oh, well, actually, that leads into my next point. So,
actually, wait, am I a millennial? Maybe I'm a millennial. I don't know.
I don't know what the cutoff is. Actually, you probably are. You're not a Gen Z.
No.
Yeah, you're probably millennial. See, the thing that bothers me is that I'm on the cusp of not being like I'm a Gen Xer or a millennial. Okay. Like I have more in common with Gen Xers than millennials, so I hate being put in that category. But
I thought Gen Xers are the ones that are even younger.
No, Gen Xers are right after the Boomers.
Oh, okay. So what are the
Boomers? Gen X, Millennials, and then Gen Y.
Gen Y. Okay. So those are the ones that get mad at everything.
They are the snowflakes.
Okay.
Because they're the kids raised by millennials. You know, the alternative thinking group.
Right.
Yeah.
Let's leave it at that.
but yeah. So the Fundstrat was making a point. They're like saying, one, millennials are heading into their income earning prime, and they're going to be inheriting the massive wealth from the Boomers.
Oh.
Right. So there's going to be a massive.
Very well.
Yeah. So there's going to be a massive wealth transfer. They're like saying, so what you really want to do is target millennials. Whatever stocks they like will probably do quite well in the future. I thought that would be interesting.
Yeah, it's kind of interesting to know. I guess it kind of makes sense if you think about it. You know, if you think of like everyone that was the baby boomers, like they were all about industrials, right? You know?
Yeah.
And now it's all about tech. But still, we're hearing that everybody's going into industrials again. So it's kind of
and that's the funny debate. So I was talking with my friend about it. That so they're the family with the family office, and it's like our bet is that all those traditional plays are going to be the bad bets. The counter trend is to keep with growth stocks, because the consensus right now is the growth stocks are like done. It's going to re-rotation, blah blah. It's all you hear every day, right?
Yeah.
But we disagree, because we think, yes, if you look at it just from a strategy perspective, if you remove history and all the other context, then what you should be doing right now is going into commodities and industrials and financials and whatever. But if you actually put it into context and look at how the world is changing, those industries are absolutely dead. You're not going to see a bank get more customers. You're not going to see oil companies expanding. They're going to be dying. It's all about renewables. And so it's still the tech companies that'll win, when the tech companies are still the growth stocks.
Yeah. And that's the thing too, is even Apple, stuff like that, they've been around forever, but they're constantly coming out with new stuff, better stuff. We have Apple homes, we have Apple glasses now, I think, iPhones keep getting better. There's every 6 months, it seems like there's this new revolutionary thing that's coming out. So, why would that stop? I mean, it just keeps improving, right? So the company's not just going to kind of peter off, because they're just going to keep getting better.
Yeah. And I was listening to a podcast, and these VC guys they made a good point. It's like 10, 15 years ago, it used to be that you're a technology company. You're a technology company, you come out, you do something new, right? Like a Netflix. But then now they're saying technology companies have shifted to a point where they're not doing anything new anymore. They're just replacing old businesses, right? So a Zoom will replace the boardroom, kind of example, right? Okay. Yeah. You're just kind of digitizing legacy businesses now. So that's why there's a shift.
Yeah, that makes sense. I mean, pretty much everything that's coming out lately is just, just a matter of conveniences, right? Like self-driving cars, Apple Home, all this kind of stuff that just makes everything easier, right? You just have to move less.
Right. But even the most mundane stuff. So retail. The stores are getting destroyed by Shopify and online retail. Grocery, you're getting deliveries now. So like all that brick and mortar physical world kind of stuff is all going digital now. So it's quite an interesting shift.
So why is everybody buying AMC right now? That's my question. I just wanted to ruin your day.
That is a very good question. That's a very you know what would destroy the AMC trade? Because I experienced something similar to it last year. I bought Air Transat. This is like right, after all the airlines tanked, right?
Okay.
I bought Air Transat because a buddy of mine, he's a middle level manager at Air Canada, and I want to avoid airlines, but he told me some good things. He's like, well, first of all, Air Canada, apparently they were well capitalized, they could survive, there's not a problem. And then they struck a deal earlier in the year where they're going to buy Air Transat. I forgot, for like $15 a share, something like that.
Okay.
And then at the time, Transat shares fell to like $7 or $10, something like that. So I was like, wow, if I buy this stock at $10 and the takeover gets approved and happens at 15, I make an easy 50%.
Yeah.
That did not happen.
Oh. What happened?
So I think this might happen to AMC. So what happened was Air Canada negotiated the $15 a share before COVID, right?
Okay.
They looked at the books like, okay, you guys are worth $15 a share. Post-COVID or during COVID, obviously Transat wasn't flying. They're basically just like a mess of debt.
Right.
So what I didn't see coming was Air Canada renegotiated with Air Transat. They're like, listen, you guys could go bankrupt, or you're going to take our $7 a share offer. It's up to you. They were just like, they just didn't even care anymore. Like, we don't even want you right now.
Right.
And so I bought at 10, I sold at 7.
Did they end up buying it, or did it just not happen?
The shareholders overwhelmingly approved the $7 a share, the 50, the half, cut the whole thing in half because they knew they were going bankrupt.
Right.
There wasn't even a debate. They're like, yeah, we'll take whatever you give us.
Yeah, I could see that. I know I've still been so on the edge with all that stuff. Like, people keep talking about it, like, oh, do you think now's a good time to buy travel stocks? Hotels, airlines, cruise lines. I'm just like, man, there's just way too many unknowns out there for me personally. Like, all it takes is one more government lockdown to just kill one of those things.
You're right. Just think about what would happen if one vaccine says, it's not as effective, then suddenly back to lockdown, and then that's it.
Yeah, I don't know. It's there's too many unknowns for me and that kind of stuff.
And like, what was I going to say earlier? Millennial stocks. Oh, Tesla. I want to talk about Tesla a little bit. Because like I bought shares the other day. I think like $600 a share.
Yeah.
And like I made a post like earlier in the week or 2 weeks ago where I was saying like it's really straightforward to just buy low and sell high, but it's incredibly difficult to do because if you think about the psychology of what's happening is if you're selling high, it means everybody's buying, everybody's positive on this stock. You're the one guy saying no, they're going to shit. Like I'm getting the fuck out, right?
Yeah.
And then if you're the one buying at low, that means everyone's like, no, this sucks. This company's going to go bankrupt. We don't want it. Everybody hates it. You're like, no, I like it. Right?
Yeah.
That's really hard to do.
Yeah, for sure it is. And then the tricky thing about that too is, buy low, sell high. Like, okay, like for you, Tesla, you bought it at, $600, say. What if it goes to 580? I mean, when do you start sweating a little bit, right?
Yeah, I'm going to start sweating below. I think my number was 467, something around there. Okay. That's when I start getting concerned a little bit. But even then, only about the stock price, because like we talked about this a lot, especially the last episode. Like the price is not the company,
right? So
like if Tesla sold off to like 450, I kind of be like, yeah, okay, yeah, I get it. They're not the $600 billion company. They're maybe in the 400s. I'll buy that. Yeah. Right. So like it's just a correction, right? But as long as they keep growing revenue and they keep making more units every year, I'm just like, I don't really care.
Yeah, I can't see them going down that hard, to be honest.
Did I show you my super bearish case? It was like $89.
$89?
Yeah.
That'd be scary.
It came from a pre-split price, dude. I can't remember what number it was. It was like 385 or I can't remember what number it was, maybe 200. It was something pre-split. The split thing really fucked up my my numbers, but it was something like $89 is where's my bear case. It's the one where I told you if I saw Tesla at $89, I'm taking $100K out of my line of credit and just putting it all on Tesla.
I'd probably do the same thing.
Yeah, and that's what people don't realize is there's like, yeah, stocks will go down, but there's demand at varying levels, right?
Yeah.
There's a floor.
Yeah. Yeah, exactly. It's like we were talking about, look for the volume, look for the lines, look for the levels, and that's how you find your floors, right?
Yeah, because if you're looking at just a chart and you see a giant red candle, you're like, oh my God, it's Armageddon, like this thing's dying. But you don't realize maybe just $3 below that is a giant a wall of buy orders.
Right. Not to mention, people always panic when they see something like that, but if you look left, it's come way, 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 way up. So like there's still, everybody that was buying it on that whole ramp up, even if you had one big red day, like they're still all in the money, so they're not going to panic.
Yeah,
it's only the couple people who bought it right at the top that are panicking.
Yeah. Oh, so that's a good point. I was just remember we talked a lot this week about Bitcoin, right? And like people were saying, oh, maybe is this it? This was the top or whatever, right? And because it sold off pretty hard. I don't remember if you remember what price it was, like 57,000.
Yeah, I think it went down to 50, didn't it?
It went down to 50, but where did it come down from? Do you remember where it crashed? Where it started to crash?
2 or 63, I think was the high.
Yeah. So like I'm reading on Twitter, and like people are like, "Who the fuck is selling? Like, who are these bears?" I'm like, this thing did a 10x in 1 year. Like people are taking profit, man.
Yeah.
You put in $1,000. Yeah, like you put in $1,000 last March. You got 10 grand now. Maybe you want to buy a jet ski or something.
Yeah, yeah, exactly.
Right.
Yeah.
But like just like we were saying, like there's definitely demand for this thing. It'll hit it seems like there's a rising price floor. It'll go down, but have you noticed it's making higher lows now? Right. Yeah. In January it went down to like 29,000. In February it was like 30, 41, 38, something like that.
Yeah, I think maybe 40. Yeah, 38, 42. I think somewhere.
Yeah,
right?
Yeah. And then now we didn't even hit 50. Like we like $500 above 50. We just turned right around. Yeah.
There's a lot of, you got to think, a lot of people are looking to buy the dips, right? So
a lot of people are looking to buy the dips, and because I pay for that on-chain data service, right? So I'm looking at stats all the time. Every time Bitcoin gets over $60,000, 99% of all wallets are in profit.
Right.
So what asset? Like over 99 out of 100 people are in profit. You think some of them might want to sell, right?
Yeah, especially the guys that bought it when it was like 10 grand.
I know. So like right now it's dipped to like whatever, like 50 whatever thousand. Like I'm looking at it, there's still 96% wallets in profit. Like
yeah, it just depends. Yeah, it just depends on who's taking profits, really. Like it's not shorting down or anything. Like people aren't panicking. Every day you're sending me stuff, more people buying it, more funds buying it, like more companies buying it.
Yeah. But we're just thinking like the problem is psychological now, because we didn't have this problem. Sam will remember, we didn't have this problem last cycle, because it ripped from like 10K to 20K in like from November to December, so like a 1 month period, right? So it sounds like the previous, but it spent most of that year within like the $1,000 to $3,000 range. Right. So if the asset went down 20%, it's like a $600 move. You're not really sweating it. But a $55,000, $60,000 asset going down 20%, it's going down like $12,000. You're like, oh.
Yeah. Yeah. So like, but it's all relative, right?
Yeah, it's hard how you have to readjust that perspective.
Yeah, it's like if you're playing a $1 stock and it goes up to $1.10, it's a 10% move, right? If you're playing a $1,000 stock and it goes up $100, it's a 10% move. So
I noticed I got to calibrate like that.
Yeah,
because I forgot which one I bought. I bought something for like $1, $2. I bought a $2 stock. It's my first. I think it's my first $2 stock ever.
Really?
It went up 10 cents. Yeah, it went up 10 cents, like you said. Yeah, it's a small cap. It's the Nouveau. That graphite thing. Yeah. So it went up like 10 or 20 cents. And in my head, I'm like, what the hell is 10, 20 cents? I almost ignored it. But then I looked back, I was like, holy shit, I should have sold some on the way up.
Yeah. And I was talking to you, the one, I think it was a couple of podcasts ago or whatever, we were talking about that. I said, having such a hard time with the higher price stuff because I'm so used to playing stuff that's like under $5, $6, right?
Yeah.
So like when I get into stuff that's like 15, $20, like I gotta give it so much more range. Like I said, on those lines that I'm drawing, if I'm thinking it might wick through maybe 10, 12 cents. If it's a $15 stock, it might wick through $1. So I gotta have, like, everything's just stretched so much further out. It's tricky to get used to.
You just made me realize something. I think that's part, not all, but definitely part of the reason why I found it hard to trade Bitcoin in the last like month or so. Because ever since it broke like 40,000, the price moves like it'll swing like $2,000 in an hour. Like
right.
it's getting really hard to figure out where my buy and sells are going to be. Like you have such a crazy range to get.
Yeah, because you were trading it mostly like probably around like the 30s, I guess.
So well, I've been trading this thing since it was 5,000. So like,
okay.
And it ripped up from like 10,000 to like 50 in like 6 months. So like mentally, I haven't adjusted yet.
Yeah, that's tricky.
Yeah, because like just 6 months ago, this is a $5,000 move. I'm like, holy shit!
Yeah, made 100%.
Yeah, now it's like 10% move. It was like it happened like it went up 10% from yesterday.
Yeah.
Right. So it's like I don't know how I can. That's why actually I've actively not traded this whole last 48 hours.
Okay.
I'm seeing it go up. I'm seeing moves that I might want to enter because I like playing breakouts.
Right.
Because it did break out a diagonal trend line, but then I'm like, no, I need to just lay off.
Yeah, it's exhausting too, man. Like I tried to do the Bitcoin, I tried to trade it for like 2 weeks, and it was just like trying to look at it all the time, just because it was always trading. I'm trying to always watch it, and then it's like 9 o'clock at night. I'm sitting there and I'm like waiting for something might happen. I was like, fuck, I can't do this. So I was like, I can't do a 24-hour market.
So I think maybe Bitcoin would be like the ultimate challenge for you to learn to swing trade, because I think that's the best way to do it, right? You can't do day trades anymore.
Probably not a bad idea, because then I can get in and out of positions whenever, though, which might be nice.
Yeah,
that's true.
Yeah,
maybe we should try that. That's a good idea.
Yeah. Start doing like your longer time frame like patterns and see what's up.
Yeah, that's not a bad idea.
Yeah.
Cool. Want to wrap it up? I think we've been on for about an hour or so.
That sounds good to me.
Sweet.
All right, YouTubers.
You take it.
All right, YouTubers. Like and subscribe. Comment.
Yeah. Thanks, guys.